they own a brand out here called Alpine, which is in San Diego County. So they're much broader than just cannabis for sure.
Definitely. And that CEO knows what knows how it feels when you get a big squeeze. I remember trading Tilray from 210 to 300, and then it was back at 150 that day. For those of you who have been around the block from years ago,
What did you say was that right now?
anybody remember that
Yeah,
Tilray?
no, so I was a financial advisor at that point, and I had to talk some people out of buying Tilray at like 200. I imagine they did like reverse
Yes.
stock splits. No, okay, but yeah, wow, what an interesting one.
And I'd actually talk people off a cliff that got squeezed at like 240 because couldn't handle it, and then if they would have just taken a walk around the block, it closed at 155 or something that day. That's so it's all about pricing and timing and what you can handle. Sometimes you short something and you can't stay solvent, until you're correct. So just keep that in mind with any of these things that have, crazy short interest. If you think you can handle it, it's great. But when you can't, every minute counts.
Yeah, I CGC was the weed stock that I lost my money on.
Yeah, that was a good one for a while too. I think the guys on Fast Money were saying it can't go down ever, and it was like $60, and and then it might have went down a few times.
There was a deal with
So
Constellation Brands where something might have happened with those infused drinks. I think maybe just a couple years too early. Now we're spending too much time. We're an Intel and weed stock space. What a good time! What a time to be
that's how bad the
alive.
market is right now, I guess. you
Sometimes,
know,
sometimes
Robinhood's
it
having
feels
a good
like
day.
sometimes it feels like the '90s again. People talking about BlackBerry. They're talking about Intel. I mean, it's like crazy. I'm looking at Cisco. It's in a 25-year base. Can't wait for that to break out.
IBM has
I
been
think it
pretty
will
strong.
too. To be honest, I have a lot of friends that work there. They've never been happier. You know, they 2 weeks ago, I think they were in Vegas. They rented out the Tao in Tao Beach for 2,000 employees.
At Cisco?
So, yeah, Cisco.
Interesting. Okay. Well, remember,
So,
Microsoft was in a 13-year base, right? And then it broke out.
yeah,
So we'll see.
yeah. No, I remember when 2001 to 2011 would make fun of Microsoft. They said it's where money went to die. Meanwhile, it's just a huge, huge pace. So, I think Cisco, mark my words, within the next 1 to 3 years, could be a $90 stock also, if not more, or get some kind of
And
frisky
these
news.
stocks are big. These stocks are pretty large. That we're talking right now, like 300 billion dollar companies. I think Cisco is something like that.
I'll tell you, Cisco was such the
67.
it was such the go-to stock back in the '90s, and my goddaughter was born on December 31st, 1999, and I remember saying to her parents, I said, "I'm going to put $1,000 into an account with Cisco stock, and don't worry, her college is paid for." Right? That $1,000 is still I think it's like $695 right now. So it was hot, and it went to sleep for a whole generation.
Yes, so that's why pricing and timing matters. Pricing and timing matters. That's true. Let's see what else is going here. By the way, I still, Pony AI. Have spoken to you guys about this name a bunch of times. Um, like over a month ago when it like ignited for me at like $15, $16, and today it's at 22.92. It's trading well. It's up 8%. I still think that this is going to be like 30, $40 by the end of the year. So it just poked its head back to the weekly high near 24 to 23.83. I just rolled up my options. I had like 15 and $22 options on, and I sold the rest of them into strength. And now I'm going out like 3 weeks, and I'm buying the 25s. Just a stock to put out there. And
You know, I know you and you Logical might have a name or two as well. Logical, give me one or two names. Give Scott one or two names you're watching right now.
Yeah, Scott, by the way, that gap trade is not working out, just FYI. I'm
I
sure you've seen that.
actually
Yeah,
just looked. I'm
that's like,
sitting in options. I think they're
oh,
27 cents. I don't know where I bought them. Maybe 40 cents or whatever it was.
yeah, they're cooked. I exited the trade because, I mean, look at that candle today, just disgusting. I'd like to see it actually be able to do something before I re-enter. I mean, I'll watch it closer to earnings. I thought it would run into earnings, but I don't know what they're keeping this thing down. Anyways, just wanted to touch on that since we talked about it
All
last
good.
time, but I exited the trade. It is what it is, lost momentum. So what? I've been focused on the bios. I keep saying that. I just did a portfolio update. I added a bunch more exposure today, actually. I'm sitting at around 155% long. So I added like 40% exposure today. I think I have over 100% exposure to different bio names. Now that said, about like 60% of that is in names that are likely buyout candidates. And we got another buyout candidate today with MRUS. These buyouts are happening every day, and they're in the billions of dollars of value. So, um, I just added to another name, Nectar, NKTR. I've been adding to this one since the 20s. It's at 58, and I'm still adding to it. They have a trial. They're going to trial. I think it'll get settled before that, but they're suing Eli Lilly. All the facts look like it's in the favor of Nectar. I think that's something that's not really being priced into the stock right now, and they have very limited time before this does go to trial, and they risk a much higher payout verdict. So I feel like Eli Lilly will probably settle. Just looking at the facts, they're pretty damning, which would be probably a few $100 million of payment to Nectar, and I think that is definitely not priced in here. But yeah, I mean, the drug itself, the data that they've shown a few months ago, it's it's still undervalued on that alone. And yeah, I'm staying long in the stock, and I added today after seeing some more details some people posted on the Lilly situation there. Um, I mean, as I've been saying, I've just been liking a lot of the bios. Let's see what's been going on. The CDTX is my second largest position, up 7% today. Um, on 2x volume. This one looks like a clear buyout candidate. Probably gonna go for like 130 plus. It's at 97 now. I was buying this thing after it was already up so much. I bought it at like 65. It's at 97 a couple weeks later. Crazy stuff. But that's kind of what you need to do in this space is like not price anchor and but kind of understand what's the price something is trading at and understand the value that you're getting for that. So you do need to definitely have like that, fundamental kind of valuation perspective. And the only way to get really confident and build conviction in these bios is to build either you got to be a PhD biologist yourself, which I have not, um, but I have built a network of investors and identified some people who are really good. And so I've been able to kind of over time pick their brains and understand and learn. And after years of doing this, it's starting to really click. um, I don't know, like I want to talk about specific names, but there's just so many. Unicure, I actually added to that position today. That's the one that they cured Huntington's disease, or I don't know if I necessarily call it a cure, but very much slowing the progression of that disease, which is an incredible step for humans. This thing I bought it at 54 today. Now it's up 8% on the day, up close to 59. I mean, I'm just thinking if Donald Trump is he's the kind of guy who takes a lot of pride in what gets done under his administration, even though Unicure has been at this for like over a decade, possibly decades. The fact that, this treatment is on its way to get approval in 26 after their phase 3 data last week under his administration and under his revamping of the FDA, under the HHS, RFK Jr. Uh, I just got to imagine that he's going to be trying to take credit of look what we've done in Trump's America or something like that. So I feel like it's big. This news of curing Huntington's disease is very big news. It's a huge leap forward in treating these rare diseases. So I think that it can continue to get a lot of media coverage, and I think we're only just getting some of that now, but I think that can continue to expand. Um, I don't even know what to say, man. It's just a lot of things look really good. We had a couple of biotech failures today, MLTX being a major one, down like 80, 90%. So obviously, when you're playing these binary names before the data, a very important thing is to just be sized appropriately. Like if you put 2% into that, it's not the end of the world. If you put 20, you just crushed your year. Um, so I never really, if I never head into the data readout at a large position, I'm not a person that is going to have enough conviction to do something like that and bet the farm. In the case with like Abivax earlier this year, I had a 1.5% position or something like that, and that thing like 6x overnight. It was still extremely meaningful for me. But if it failed, it wouldn't have killed me. So I think, headed into data readouts, unless you're some biologist that has an edge into the data readout, it's a really, really tough game. And even the smartest people hedge themselves with position sizing. For me, what I've actually loved from a setup standpoint is to buy these stocks after the data readout. I'll miss the first 300% move, which sounds crazy, and then I'll buy something and then be up 50% in the next like 2 weeks. So if you look at Unicure, Unicure was actually like 25-30 bucks in pre-market. Unfortunately, I'm on the West Coast and woke up too late. I bought it at $40, which seems late. The stock's at like 13 or 14 pre-data. It's up 200% already. I buy it at 40 to 59 right now. Man, it's almost 50% move after the data, after it got de-risked. And we're talking in a week's time, it's up 50%. So just, really incredible work there. CDTX, same situation. I bought it after the data. Abivax and Nectar, I actually had some into the data, but I actually sized up after the data. And like for example, Nectar ripped into $37 right after they reported data. It pulled back to 22 range, the $22 range, $23 range, and it was there for about 2 weeks. Gave you all the opportunity to buy more of this thing after the binary risk, and then the stock's now at $58. So I mean, you could double, triple your money even after the data, and that's kind of the idea I want to drive home. Is like those seem to be really big winners. Um, Moving on from bios, they're
Scott, I was
really good.
wondering if
Yeah, go.
Scott, if any of those names that he was talking about there, if any of the things were interesting for you.
I was just kind of listening to him go through it. I wasn't punching him up. I'm still trying to manage some of my positions from today.
Yeah.
I would just say that, hearing him talk about pre-data and all that kind of stuff, I know what I tell my traders is, never take any kind of positions pre-data or whatever it is. If anything, just options. Mostly for bios, I tell them just take options because you're either going to, hit a home run or you're going to strike out. And if you strike out, you don't want to blow up your account. So, make sure risk is premium paid. So I'd rather see individuals, take options. And I know some bios don't have options because they're like $1 or $3, whatever. So those are like options anyway. So you have to be size appropriate. But in most,
Do you ever
bios
trade bios yourself?
sometimes, sometimes I like to trade the indices if I think the sector is going to work out. I don't know enough about names. Every now and then, some individuals from the Alpha team will bring in some decent names. We used to have a bunch of guys that really focus on it. That they would bring it up and make a case for it, and I would do it. But for me, I really it's not my sector. I just if someone has a real ace setup and they present it to me and I like it, I just go with it. But I'd never do it for more than a tier one type of thing. I did have a really bad experience with a bio. It was called Mustang Bio. I heard we talked about it a little bit earlier, where I had a friend of mine who was close to the company and made it like it was going to be cure cancer and do all these things. And P.S. Every time it had good news and it had like 20 pieces of good news, it would just go down. And I bought too much of it, and I learned a few lessons. I haven't been in it in 3-4 years, and I just again, for me, I'd rather be in sectors that that it's not a kind of like an all or none. More like I could stay with the sequence, I can massage the position, I could not be really surprised. Like I don't even trade Boeing really because of that. When it's a battleground and it's could have had news, you could have a door blown off or something could change that you didn't foresee. I'd rather just be in different sectors and different stocks that usually that doesn't happen to.
Yeah, here's the thing though, Scott, and that's kind of what I want to say is like I've had a couple into the data readouts and whatnot, but again, like I would say that like the biggest alpha I've seen so far in terms of risk adjusted reward has been buying it after the data, because
Right.
it's like then it's no longer all or nothing. Then it's like this is already positive, and it's almost like I don't want to say it's a guarantee to make money because there was actually a name IMRX last week that was up like 50 or 60% in after hours after reporting their 9 month data, and then the next day it completely reversed. So I'm not going to say it's like a blanket statement 100% hit rate,
Mm-hmm.
um, but
Well, it's
like
kind of probably like
yeah,
it's kind of like a company comes out with a great earnings report, great guidance, has a
right,
huge gap
exactly.
up, and you buy versus that gap, and if it holds above the gap, you could then
Yep.
see another huge move thereafter. But sometimes the gap is priced and it doesn't hold it, and it's unfortunate.
Yeah, I mean, I think definitely like it's not something you can't trade these things. You need to have a fundamental view of like what you're paying. there needs to be like, hey, this stock is, this stock should, like, for example, Nectar was trading at $22, $23. Like, there was a this shouldn't have been under $50, basically, from all the estimates I had seen, all the comparable buyouts. ABPX, same thing. It was, at 50, $60. Every comparable buyout in the past was at what would have been equivalent of like $120 or more. And the stock's trading at, like, 50, 60. So it just, even right now it's sitting at 80. That's still reasonably to expect a 50% upside from here. So um, I think you need to have like that kind of view to have confidence and conviction, confidence to take the position and conviction to size it up.
Yeah.
Um, yeah, but
Well, you
anyways,
also
yeah,
you
that's
do
the
your
bias stuff.
homework. Like this is your stuff.
Yeah.
This is the way you do it. So, so I do my homework on technicals, and unfortunately, because not unfortunately, but as a chief strategic officer here, I have to, in an hour 15, give my active take on 40 different names, that I put
Right.
together early in the morning. So I'm not doing the deep dives. I'm more like cocktail napkin technician stuff with a feel to the overall macro, with where the narrative is and what everybody's keying off of, and I
Right.
put it all together into decisions.
Oh yeah. I mean, I totally feel that. Here's another thing is this market looks great. A couple thoughts there is, like, SPY kind of almost touched flat and bounced a little bit. But if you look at the RSP, which is the equal weight S&P, I think it's at the highs of the day today. I mean, that looks great. And I saw that they were like selling puts on it last week. So maybe they still believe this breadth expansion carries this bull market for its next leg higher. And then if you look at, I just posted something today about looking at the SPY over like the last like 5 years, the 2021 bear market, 2024 bear market up until the tariff tantrum, and then now 2025. I mean, if you just look at the weekly chart of SPY, it just climbs up that 9 EMA on the weekly. And that's very normal. So like this trend of, up and to the right nonstop, like this trending market is very normal if you look at past bull markets. And I think what you'll notice is like a common theme is like if we start losing the 21 EMA on the weekly, that's when you start getting a little bit more defensive because you're not sure if it's a fake out or if it is like we're actually going to break down and this is the end of that market and we get some sort of correction. So I think for right now the market's been looking healthy. I think trying to like predict that it's not going to be healthy is not a really useful or productive task. It's just more like being paranoid and cautious, but at the same time taking full advantage and riding along. Um, one last comment on the bios, man. I mean, XBI is about to crack $100. This thing looks great, and it's been probably the strongest index lately. And if you look at the weekly chart of XBI and you look at it on like a 10+ year range, basically, whenever the XBI breaks above the 200 SMA sustainably, it's basically a decade long bull market. At least that's what happened last time. And, in the last maybe year, last November, maybe February this year, it basically had fake breakouts above the 200 SMA and it got rejected and broke down, but this does feel like it's going to stay above the 200 SMA. There's just way too much fundamental momentum in the sector. So many buyouts, so much money, like just being moved around. For example, a buyout happens, right? All of a sudden, those stocks move up. You know, whoever Merck or whatever, whoever's buying these companies, they're basically infusing billions of dollars into the market. They're paying out those shareholders. Now that's just wealth created in the industry. And then those investors who are getting paid out for their shares have a ton of money to reinvest back into the sector. So there's just a lot of this money going into the sector right now. And a lot of it's coming straight out of these pharma companies' balance sheets. So it's like the fundamental thing is there. The companies are bidding up the stocks in the sector, and you just have like this tailwind right now. And as interest rates come down, I feel like there's going to be more and more money being invested into the sector because what are you going to do? You can't sit at T bills with $10 billion of cash if you're collecting 3% on that. It's just not gonna work. You're basically barely beating inflation. You got to go do something with that capital. And right now the bio assets are still cheap. So I think if you're not snatching up these therapeutics companies that are in phase 3 trials, et cetera, then your competitors might. So it's a race to buy as many companies as you can right now, and we're having a record year of M&A in the biotechs right now, which is great to see. And I mean, look at XBI today, up 1.3% compared to the other indices. It's just been showing a lot of strength. Um, anyways, yeah, just want to end it there on the bios. 'Cause I know I talk a lot about them, but they really are starting to wake up, and it's great.
Well, congratulations, staying the course. And
Thank you.
now the technicals are all kind of getting in line with a lot of the research and fundamental facts that everyone puts in. So when they go, and then hopefully the best ones perform the best. And that's that. So
Yeah,
you
yeah.
deserve to get picked.
Yeah, thank you. And it's another thing, like, people are talking about the IWM a lot. It's still always going to be the alpha is in the individual picks, but um, still very, very nice backdrop for a lot of these stocks to keep working from here. So yeah, I think outside of the bios, though, I mean, there's been a few tech stocks that look pretty damn good today. I mean, Ethereum bouncing back a little bit. Galaxy Digital looks great today, up 11% on the day. Braze Software bouncing from the lows, now near the highs of the day. Let's see what else. Evolve Technologies, I mentioned this one last time, basically at highs of day today. Uh, yeah, I mean, there's a lot of stuff working. So yeah,
Did
it's a healthy market.
last Monday did I talk? Last Monday I started to buy the IBIT calls because I was like, listen, guys, everyone talks about October and they talk, and during Thanksgiving is when the grandma and the Uber driver says you have to be in Bitcoin. I'm like, but that's when it's at highs. I'm like, right now it looked like the Bitcoin was trying to form the right shoulder of an inverted head and shoulders pattern, and I put it out there over the weekend. Well, actually, no, I put it out there on Thursday, Friday, because I started buying the IBIT calls, the $67 calls. I went out to, I think, October 17th and then November 7th, just to say, hey, I want to be in the money for this to go for, because if it holds 108, it has a free reign to about 117. So that's a trade. And then if it gets above 117, then there's really nothing until the highs of 124. I'm like, so instead of waiting for October or Thanksgiving, like this is the time to get in some. So and then today it's up 5%. So my entire, like, I actually sent it out for my Power Plays product on Thursday. But I think I was wondering if I spoke about it here on last Monday. Maybe I don't know if I did. Hopefully, some people bought it because it was a really good trade for me today, and I had to take a little bit off just the size of the move. But I do think that today's big day one in Ethereum and Bitcoin is going to create a sequence to take us through highs over the next few weeks. Anyway, that's
Yeah, well said. No, I mean, I think that, look, it's a bull market. And if that's the case and risk is still on, then, Bitcoin's going to work and Ethereum's going to work. I'm still very bullish Ethereum. I'd like to see a little bit more reclaim of some moving averages, but you're doing probably a decent job here of, you know, I don't know if I want to say calling the bottom, but you're buying the bottom, I would think. And because I expect that, we will reclaim these moving averages and head back up to the next leg higher. I don't think we've seen the tops of, crypto in
definitely
this
not.
whole cycle. You know what I mean?
No, no, I hate to have such conviction, but that 124 is not going to be the high of 2025. We're going to probably see like 140. I'm not in the Tom Lee crazy camp. He likes to make headlines, but the amount of institutional interest in buying that's happening, the net buying, it's in coming into the time of year. People were expecting a lot in September, and they would say, "What's the matter with crypto?" I'm like, "What are you talking about? September's a month for crypto, and it's hanging out, acting well." I'm like, don't have a fault, have such crazy expectations, And then finally, it started to get beat up a little bit, and then that was the time that I started to buy some for, last week, and now I'll continue to just buy dips and measure the sequence and measure the power.
Yeah, man, I totally get it, and I kind of want to like add more Ethereum. To be honest, I'm very bullish Ethereum. So like,
This is the
yeah,
time you
Join
should.
BMNR.
This is your time.
BMNR. Water's warm. Tom Lee. And we made
maybe.
some claims there. What do you, Scott? You're not treasuries.
I just
Crypto
actually today I
treasuries.
bought some. Today I just bought some options on SBET, SBET.
I
It's
like
gotten
SPET.
it got battered and bruised. I usually trade BMNR more, I just screwed up something there, and I just kind of psychologically didn't want to go back to it today. So I looked at SBET, and I had some really good trades a month or two ago. So some of the option guys in my floor were saying that the Octobers are lighting up, the October 3120s. And here we are at 17. I think that's a good risk reward. That if crypto and Ethereum and they start moving in October and get back there, like I don't see why this SPID won't be 25 to 30, and you could probably make 5x on these October options.
That's a great call out. I like SBET. I actually have had a successful trade on SBET this year. Very big trade, but BMNR, I got absolutely cooked on that one. So
It's
I
funny
hear
how
you,
you
man.
have footsteps, even though the stock doesn't remember it, and I'm sure the sponsorship on BMNR is a lot more. You have Peter Thiel, you have, Kathy Woods buying that, you have Tom Lee, so it's better than this. But, just for today, I just wasn't in the mood to do that one. I also owned a ton of it at 42 on that last pullback, and then when things started to get a little nuts, where every treasury stock was coming out, being announcements for link chain treasury stock, for Sol treasury stock, this and that. I'm like, you know what?
Right.
It's getting a little too crazy. I'm
Well,
done.
well, that's the thing with the treasury stocks is that there's so many of them popping up that the premiums to NAV that they've been trading at start to deteriorate. So all of a sudden, if 2 times or 3 times was what we were pushing, I think a lot of these are going to re-rate back towards like 1 times NAV, which is like the Ethereum that they hold on their balance sheet, and that's kind of what happened to MicroStrategy. I mean,
Yeah, exactly.
Jim Chanos came out and shorted MicroStrategy and bought Bitcoin and has had like a 25% delta in
I
his
remember
favor.
that day. I
Yeah,
fully remember that day.
and I
That's
think
why
we
I've
all
been I've been I've been buying more ETFs. I say the same thing. I'm like, why are you going to try and be so cute with these stocks when
right.
just buy IBIT or buy a 2x IBIT, buy ETHE, or do whatever it is. You don't need to
Right.
be in the ones that are going to, when they look their best, they're going to come out with some kind of at the money offering or something because they need to continue
Exactly.
to raise money to buy them.
Yeah, you're basically making like a bet on a bet rather than like just the bet
Make
itself.
the
Like,
bet. Go with
yeah, exactly.
Ethereum. Go with Sol.
Yeah,
There's ETFs that match them pretty well now.
I own ETHA with calls, and I've held those since July. So I feel pretty good about that. I've trimmed a good amount, which is why I'd like to size it back up a little bit. But yeah, I mean, I totally agree with you. And then you think about that MicroStrategy trade. I think everyone thought Jim Chanos was crazy when he said that. And he's like, okay, dude, good luck. You're going to get blown out of the water. And that has not happened because, they basically, all these other companies saying they're going to do Bitcoin treasuries have diluted the opportunity and taken away, the flair of MicroStrategy. So yeah, it's a tough one. Why bother? Is kind of my thought. And yeah, you could just always, if you want leverage to the asset, just lever the ETFs through options. Like what ETHA calls,
Right.
like what's the difference?
No, I get it. There's some premium there, but then you just could do a call spread. So if you're not showing the time, if you think, hey, maybe it's going to happen mid-October, or no, it's going to happen in November, then you know what, go out and like I was thinking, I didn't do it. I was going to buy the $67 calls and then sell the 72s, and instead, thank goodness, all I did is buy straight calls because it didn't ignite yet. So I'll wait for it to have a 2-3 day move, and then I'll sell, create a call spread, lock it in, and then figure out a different trade. Anyway, it's 3:56. I have to get back in my radio. Yeah, listen, end of the quarter, don't do anything stupid. Hopefully you're getting paid really well for September this quarter. Been a lot to do. You have to be planned. You have to have your routine. You have to figure out ways to burn off bad days, not celebrate too much on good days. And this career could happen, and investing could create wealth. There's so many things that you could do in the stock market, and everyone talks about all the risks of the stock market, but these spaces that you guys do talk about all the risks of not being in the market, which is a lot more constructive than most networks out there. So congrats to this spaces and for everyone who contributes and for you guys doing it every day. You're adding much more value than the 3-minute sound bites that I even do on Fox Business, because it doesn't make anyone any money. So this is the place to be, spaces like this with people who are doing it.
We appreciate you for being here, Scott. Everyone should definitely make sure you are following Scott. We appreciate you for hanging out with us and the kind words.
All right, be well.
Awesome. You should also be checking out all the other speakers too. A lot of great people contributing to this first hour we have going here. We have 3 minutes until the market close. Les, was there anything anyone was like itching to say before the market close? Any trades you guys wanted to call out or anything? No worries. I did just get a notification around Lyft being up 5%. I know that's kind of became a little bit of a spaces story. Also, while you were talking there, there was a story out of From Wire that OpenAI is preparing to launch a social app for its AI generated videos. As I was reading the story, this kind of reminded me of the Meta announcement that came out that was ridiculed a lot on X yesterday or no, the other day from Alexander Wang.
Test radio,
But
test Nate
uh,
radio.
but yeah,
Hot names spiking into the close here.
are they? Meta
Big
was
time.
falling, is what I was kind of getting there. Snapchat was too. MSOS. Let's take a look.
I like Amazon. I'll see. I want to see how Amazon acts tomorrow. Made a turn in the last 2 trading days, so we'll see if it can catch up with the rest of the market.
Probably won't.
Tilray up 60% today. Apple down 20%.
Damn, really?
Yeah.
No, well, then you hit me with the Apple down
Yeah.
20
I
after.
want to see if you're paying
Hillary is
attention.
actually up 60 though.
Yeah, I know. Crazy, right?
But I guess we're at $1.20. Fair. No, I was clicking it in. I was like, do I believe you?
Remember, Apple
I
doesn't
don't know.
innovate, Evan. Remember, you can't make money in them. They don't innovate. So
Struggling to innovate its way to all-time highs right
I
now.
know.
254, 260. We're kind of close. The problem is my individual stock portfolio is now a little bit skewed and is not a true reflection of the market anymore. So I need to shift off this one.
I got to say one thing real quick before we close. I'd be curious if Mike feels this too. I got a lot of people in my streams and in my Discord that are super bearish right now. They're like, just the market's gonna crash. This is it. And I'm like, I don't get it. Like, do you see that, Mike? Do you see people? Oh, Mike's gone. I think. Yeah.
I see it a lot. But I mean, I definitely do see it a little bit more than normal. Not too much more than when we're in an extended bull market, but yeah, there was this comment about everyone posting their screenshots and people were dunking on them for that. But then also you dunking on them for them posting their screenshots, doesn't that kind of like negate it out, because people are talking about it? So some interesting stuff going on. I've definitely seen more people, I guess on both sides being parabolic about it.
Yeah. So we're gonna close. Tilray closed up 61% all time volume. Wow. All right.
The weed stocks are getting lit. They're
Gets easier to set all
lighting.
time volume the lower the price goes. easier to set a new all time volume at $1 a share than it is at $3 a share. Just messing around.
It is six
It was
times
pretty good.
times average volume too, which is pretty good.
Yeah, no, it was good volume on the weed stocks today. I'm just messing with you. Those had some nice moves. I actually was thinking of buying some of them in pre-market. I should have, but I was too busy reading other stuff. Pretty good day in the markets though. I'm running 19 positions right now. I have 14 green today. Out of the ones that are red, nothing down more than 1.5%. So pretty balanced day for the book. I mean, obviously a green day. I imagine most people were green today. I don't think that's much of a surprise. Um, Total return on the year is at 263% now, year to date, which is beautiful to see. I don't really think any of the names that I'm in are giving me much of a concern at all, based on the price action. So I continue to just keep my head down and stay focused on those names. Robinhood obviously had a monster day today. I'm sure that was one of the market leading stocks today, up 12%. Lyft was up about 5. Genius Sports was up about 5. DPRO, which is my small cap drone play, that was up another 4. That stock's up like 30% since our entry like 8 days ago. So that thing has just been absolutely ripping. It's the only really true small cap in my whole portfolio right now, and it's performing really well. So I think we started at a 4.5% position. It's almost a 7% weighting now in the portfolio. So it's been absolutely on a tear. Centrus Energy doesn't seem to want to go down. Found its way to squeeze out another 3.5% day again today to the upside. Uh, I think sellers are just disappearing on this thing as that expansion news came out last week about their Piketon, Ohio plant. That was like the bull thesis for Centrus, and it's panning out now. So, not surprised that sellers are disappearing on that one as it hits back to 315 today. It's my largest position by weighting. My second largest position by weighting is Nebius, obviously, which is also up 2.5% today. So, yeah, it was a nice day today for pretty much everything. not a whole lot of distinctions and observations I think you can make on a day like today where there was so much strength, but that's fine by me. Even on some of the choppier days last week, I found my way to make some relative strength observations, but I don't even know if that's too productive to do in this environment because it seems like a market that just net wants to go up. Now we have a lot of quarterly rebalancing actions that are going to happen in the next 9 days or so. Next 9 to 12 days, I think, is really a better way to put it. You will probably see some big random moves on a lot of individual stocks. I think one thing that I like, because I'm focused on SMID caps, is in SMID caps, you're generally isolated from those types of moves. Those types of like aggressive rotations tend to happen in the more liquid names. You're talking 50 plus billion market cap, at least, usually 100 plus billion. Those are the names that see really aggressive rotations because they allow for it, right? You have to think from a liquidity standpoint. Like if an institution is positioned in a SMID cap name, let's say, and they want to decrease their exposure or rotate out of it into a new quarter, they can't do that immediately, right? Like the liquidity doesn't allow for it. They would tank the stock and they would hurt their own sales. So they have to gradually exit those positions, which means that there tends to be less of a direct volatility impact from institutions rotating in and out of mid caps. And you'd think it wouldn't be that way, right? Like intuitively, you would think, well, mid caps are actually more susceptible to extreme volatility when there's institutions rotating in and out. But it's actually doesn't work that way. So counterintuitive, but yeah, mid caps provides you a little bit of isolation, I think, during these quarterly rebalance periods, the same way that they do provide you some shelter during like events like quad witching and stuff. So just another advantage of being in those mid cap names, in my view. But it's a healthy market. I mean, very healthy market as far as I can see. All I'm seeing is broadening. I think the rebound in crypto over the weekend was much needed just for speculative purposes. Crypto is a really important part of speculative enthusiasm in this market. And so you need it to kind of perform if you want the high beta stuff to perform. So I liked the rebound we saw in crypto over the weekend. It was much needed. It was at a very critical spot for Bitcoin on the weekly chart that it defended around that 109.5 area, and then got a really, really nice bounce, and over 5,000 higher. So crypto did what it needed to do over the weekend. A lot of individual stocks, market leading names, did what they needed to do at the end of last week. And when I'm thinking about price action in these moments in the market where there's a lot of narrative headbutting going on, there's a lot of people like calling for a top, and there's other people that are like, I don't know when it's going to come. And when you have this kind of a lot of narrative noise, I think the best thing you can do is ask yourself, like, what do the stocks need to do? What spots do they need to defend? Not what you want to happen, because like in these kind of environments, you're not going to get ideal price action. You get ideal price action when everything's gravy and you're in a raging bull market and conditions are, in the status quo or relatively chill. That's like when everything works and every wedge breakout is exploding to the upside. Every test of the 200-day moving average is producing a 20% upside move. Those environments are not only easier to trade, but they don't require a lot of conviction and they don't require you to do a lot of work. These environments that we're in now, you sort of have to stay focused on the names you own, and on a week to week basis, ask yourself, okay, the price action may not have been ideal this week. It may have been noisy on the daily chart. It may have even shaken out a lot of shorter term traders, but is it defending the spots it needs to on those weekly and monthly charts? Like, are bidders stepping in at the last point of support? Like, that's what you want to see in this market. You want to see bidders still willing to buy stocks that might show relative weakness headed into these types of days. So I'm still seeing that. I'm still seeing stocks that, even the disappointing stocks, right? Like there are only two names. Right now I'm holding the 19 names, like I mentioned. There are only two names that are down from our entry. Both of those names into the end of last week and the start of this week were defending the spots they needed to defend. So that's promising to me from a price action standpoint. And that's the kind of things I like to look for in environments like this, rather than listen to everyone else who's telling me how to feel. I like to kind of just zoom in and be like, okay, is this working how it's supposed to work? Are the buyers stepping in where they have to step in? If they are, then who am I to say the market's gonna break down in a scenario like that? So I remain cautiously bullish. Obviously, the caution mostly comes from the the reality, frankly, that we've doubled the NASDAQ in 2 years. So yeah, things do feel stretched, but I'm not going to be a guy that fades a bull market. We're in a bull market. The technicals say it. The economic data still says it. You know, we're still hanging on by a thread as far as it comes to labor. So, you know, you have to just wait till the data says we're not in a bull market anymore. And I don't know when that's going to be. But for now, you dance while the music's playing, and you've been getting paid if you've been doing that. So.
All right, well, I'm here now.
Both, I was going to say, I hope both the hosts aren't AFK.
No, I just got here, so I don't know what's really been covered yet, but I do have a question that I'm curious on your opinion on. It's around the quantum stuff, and it, I think there's a couple different pieces that we could hit on this, but I'm curious, you and Logical both, if Logical's still up here, but like today, you just said dance while the music's playing, right? And how does that work on a sector by sector basis? And then when it comes to something like quantum, today we saw Citron came out a little bit ago and they're shorting it. They're putting out a short report, those kind of things. I'm just curious how much credence you put into short reports, if it depends on who it's from. Do you read that and add that to your research? Where's the I guess the balance there? And then as far as, hey, a sector, a theme is hot. I mean, if the market's hot, the market's hot, right? But on top of that, when you go down to sector, I'm curious your thoughts around. eh, Okay, the quantum names as a whole are all doing this. They're holding their moving averages. Just for the example, I'm not looking at the charts. I'm just saying for the example. Do you still dance while that's playing? And wait for that to break. If you're, or I mean, you've talked about Nebius, you've talked about several of these other rare earths.
Yeah,
Just curious where you go with that.
I kind of get your question. Yeah. So I think a lot of what you're referring to is actually has to do with stock picking. You know, when we refer to like the music playing, there's a couple things to realize about that. First of all, the music doesn't play equally across the whole market. It never does. It's not like everything goes up the same amount, right? So that's point one. The music does not play equally across the whole market. And point two is if you ascribe to this philosophy of dancing while the music is playing, which essentially, for people that don't know what that means is you stay long until the market forces you to not be long. That's what that means. Okay, you just stay long in perpetuity until there is a genuine, legitimate breakdown on your short-term stocks. Then you sell your short-term stocks, you keep your long-term stocks, you build core positions that you can hold into the next cycle. That's what that means. That's what dance while the music is playing means. But anyway, if you ascribe to that philosophy of dancing while the music is playing, what you are also assuming, what is implicit in that philosophy, is that the music will stop. Right? If you say dance while the music is playing, you are implying that at some point the music will not be playing, right? And that's where the stock picking comes in, because there are a lot of people, and you can ask the SPAC people from 2021 about this. And I think Brian brought up some names. There's a lot of SPAC names from 2021 that are either not listed anymore or didn't recover at all, despite what's happened to the markets in the last 2 years. Many of them are still 90 cents or a dollar, right? But in the moment, in 2021, they were the best things to trade. They were the single best upside opportunities in the market, risk reward opportunities in the market in 2021. I traded the hell out of them. I did not hold any of them post that cycle. But that's the difference, right? The difference is distinguishing, like when you look at from a technical standpoint, when you look at momentum, right? If you're somebody who's like, oh, I'm going to identify momentum stocks in the market, and you're looking at them purely technically, the good quality names and the momentum hype garbage names look really similar. They'd both win the title of momentum stocks if you were looking at them in purely a technical vacuum. But to your point of which ones you should be willing to or scared to hold into the next cycle, I think the distinction is the context, right? Like what you know about them, how much you feel that you can stomach the valuations. Like I think in nuclear, a great example of this is the small modular reactor stocks versus the national strategic asset stocks, right? Like SMR, we owned it earlier in the year at 18, sold it at 36, never got back in. I don't know what it's trading at today, maybe higher, maybe lower, but it doesn't matter to me. Why did I not hold that stock despite my belief in the nuclear trade? Well, because it's a pre-revenue stock. I can't personally in my brain justify it at a 10 or 15 or whatever valuation it was when we sold it. Same thing for Joby. Like Joby, we got it at 850, sold at 16, 17. I don't know what it is today. Maybe it's higher, maybe it's lower. I haven't looked at it. The point is I couldn't stomach it at a 15, 16, 17 billion dollar valuation or whatever it was when we sold it because again, it's a pre-revenue name. So for me, and this is just me, the pre-revenue names that are momentum stocks are just for trading. And the ones that I decide to keep, if I do ever keep them, are ones that I feel like have real sustainable value. Now, there are examples of that. Robinhood from last year, right? We're in sub 10, still own it. It's 100 plus, still own it, right? So that's a name that I didn't just trade out for the momentum, right? I held it through last year and this year, and I plan to continue to hold it. Right? I have a sub 20 cost basis. At this point, that's going to become a core part of the portfolio probably forever, for the foreseeable future, I should say, not forever, because I don't want to ever say that. But that's an example of one that I retained, right? And then on the nuclear side, I was like, okay, getting out of SMR, but I kept Centrus Energy and Energy Fuels. Well, why did I keep those ones? Well, because even though on a PE basis or price to sales basis, they were overvalued in May, the same way they are overvalued now, they have real strategic national assets in Piketon, Ohio, and Richmond plant and the White Mesa Mill that I knew, or in my view, not knew, but I had studied those assets well, and I felt that they were extremely valuable national assets. So I stayed long those stocks. Look how well those stocks have held up, Energy Fuels and Centrus, versus the rest of the nuclear stocks, and look at the constant bid underneath those things, even on days when nuclear is correcting, right? That's the market loudly telling you the distinction between hype and actual value. So, to your question about any of these names, space stocks, satellite stocks, nuclear stocks, quantum stocks, there are names in these industries that will probably find their way to be first movers of some sort or product innovators of some sort or even be beneficiaries of huge levels of government assistance or government investment like we're seeing in nuclear. All of those are potential routes to them becoming legitimate plays, but the vast majority of these momentum stocks are going to go to zero. Like, let's not lie to ourselves. The vast majority of these pre-revenue stocks are not going to become multi-billion-dollar behemoths. I mean, even when you look at the SMR stocks, right? Which again, I'm bullish on nuclear. I'm bullish on small modular reactors. Like, what is the business going to look like for those guys, even when they do deploy the SMRs? Is it going to be an extremely high margin like business? No, no. Like who are we kidding? So you have to try to contextualize things. And look, Brian was saying this too. He was like, "Oh well, the pre-revenue people they missed Oklo." Like, yeah, okay, you're going to miss stocks by having that point of view. I'm not saying you should never trade a pre-revenue stock. I'm saying for me personally, to be able to hold a stock for multiple months or multiple years, I have to be able to wrap my mind around if it is valued at a premium, why it is valued at a premium, and if it's not, then I have to wrap my mind around why it should be. And those two things are sort of the way that I try to guide what I hold versus what I trade. And I like to trade the hype stuff. I've traded the quantum names. I've traded the space and satellite names. I've traded the SMR names. I've traded these stocks. I'm not telling people not to trade them. You should trade them. They're fantastic stocks to trade, especially when they have catalysts. But I don't, for me personally, in my portfolio, I don't see a place for them in terms of durable holds for any of those names. Now, Centrus and Energy Fuels, that's different. Those I am holding, right? Those I don't think are just hype. I think they're very, very valuable national strategic assets. But, you know, the other pre-revenue names, like, no. And I don't have really any, I mean, I guess I do have technically one sort of pre-revenue name in my portfolio. It's the only small cap in my portfolio. But outside of that, I don't really have a lot of pre-revenue exposure. And some people do, and some people love it, and they think it's, the hottest things in sliced bread. That's cool. And if you feel that way, that's fine. But for me, being able to hold stocks through multiple different market corrections and rebounds, the ones that I've found to be better to do that with are the ones that are, have a real value proposition, have real innovation. They're at the cusp of at the margin of their industry when it comes to new products, and they're not, just a completely speculative pre-revenue company. It's really, really hard to do all the things that's necessary to go from you know, no real products, no real commercial revenue to like significant commercial revenue. That's like a very, very big step. It requires a lot of execution. It just requires a ton of stuff. So I think a lot of people feel like there's a zero risk path to monetization for a lot of these things, and that's why they're willing to pay up. But for me, a lot of the pre-revenue valuations, not just in quantum, in a lot of industries, in SMRs, in space and satellites, in a lot of these industries, I think are just ridiculous. Even in some of these pure play robotic stocks, like I think the valuations are getting ridiculous. The pure play drone stocks, like ONDS, like the valuations are absurd. They're making like some of them are making like 3 million in revenue per quarter, trading at $1.5 billion valuations. Like it makes no sense. So could those stocks all go higher? Yes. If the bull market continues, those groups of speculative stocks likely go much higher. Am I feeling the need to be exposed to them here to get upside of the market? No. And I've done fine. I mean, I post my performance all the time. You guys have seen I've done just fine not owning these names. So I think there's a propensity for new traders to think that they have to own the hype, they have to own the open doors and the this and that in order to make money in the market. They have to own the stocks that like are going up 80% in a day to make money, and this is just not true. It's just simply not true. I've owned like 9 stocks this year that have doubled this year, all of them in different industries. Everything from Lyft to Centrus to Nebius to Robinhood to Kratos. Like these are all in different industries. We've owned all these names. They've all doubled. Bloom Energy, Cipher, on and on and on and on. Like you can find opportunity in the market with stocks that have a real story, that have real potential value, whether or not it pans out, that may or may not have value that's off the balance sheet, like with things I discussed, like with Centrus and Energy Fuels. There's so many ways to find perceived value. It doesn't have to just be the PE ratio or the revenue the company's making per quarter. It can maybe be something that they own that no one else owns, or a capability they have that no one else has. Though that's worth something in the open market. And a lot of times, the strictly balance sheet guys or the strictly chart guys will insist that it's not worth something, and I disagree with that. I think that the context is really the answer to your initial question is context. Is that that's how you decide where the music is playing, and that's how you decide that. Hey, if I know that eventually the music will stop playing, I don't want to be holding the names that are going to fall off a cliff. Right? That's the distinction. Is that when that moment comes, I don't want to own those names. So there are people that are okay with that. There's people that when the market crashes, they'll be in all the pre-revenue names and they'll be okay with the results. And if you're somebody that's an experienced risk manager, then have at it. I'm not going to stop anyone from making money. If you're making money on those things, do it. But for me, I like to, when the crash does come, and it will come, it always does. I want to be in the names that I can sit on and be like, you know what? I know why I own this. Yes, it could go 40, 50% lower, but I would just buy more. Those are the only names I want to own in that moment. And whenever that moment comes, right now, like I said, I have 19 positions in the book. I'll probably go down from 19 positions to 9 positions in that moment, right? Because I only have about 8 to 9 core positions. So, yeah, that's kind of how I feel. I feel fine in this market, and there will be that moment. And when that moment comes, I'll be ready for it. But I think a lot of people need to realize, hey, depending on what you own in your portfolio, you have to be okay owning that when the drawdown does come, right? Because some things are going to draw down a lot more significantly than others whenever that moment does come. So yeah, that's kind of my thoughts on the music playing. It's not always playing equally. And the last thing I'll say is that some people I think that like just because the markets are grinding higher, that they can own anything and benefit from that. And I also don't think that's true. I think that's a misconception as well. People are like, oh, well, SPY's going up. So like this stock that I own that hasn't performed for 4 months, like it'll perform, right? Eventually it'll perform. Eventually somebody will find it. Like not necessarily. So that's important to keep in mind too. Just because the market goes up doesn't mean every stock in the entire market goes up, right? Or just because the S&P 500 goes up doesn't mean your favorite mid cap stock is going to get a bid. It is not required to, right? Your favorite $2 billion mid cap stock that you've loved for years that hasn't caught a bid, just because the market's going up doesn't mean everyone's going to find it all of a sudden, right? Something has to happen. Catalyst has to emerge, maybe a great earnings report, maybe a CEO change, maybe a competitor of theirs falls out of the market. Who knows? But something has to change usually in order for those things to get found. So, yep. feel very good about the market. Like I said, 14 out of 19 positions green today, nothing down more than 1.5%. So I feel very comfortable with the names that we're in. So, yep. I see Jaguar joined us up here. What's going on, Jaguar?
Good afternoon, everybody. How's it going? Hey, what a performance by Dallas last night. I thought that,
Yes. What a performance.
and it was like one crazy game. You go to overtime, then you tie, and nobody wins. So it's funny because I had the money line bet on Dallas last night, and I saw that it was moving in the direction that I could lose the bet. So when they were actually ahead, I cashed out a pretty nice chunk of money on the bet, and then it ended up being a tie. So it would have been voided had I stayed all the way. Nevertheless, fantastic
did you
game.
see the so Hood just for that game last night, the Robin Hood prediction alone, there was over 19 million contracts traded, which is 190,000 in revenue from one game.
Yeah, that's what I was pointing out in week one, and then I noticed the trend here that it just keeps going and going. So, I saw one analysis from J.P. Morgan Chase on this, another one from Bank of America. My expectation is that by the time we get to playoffs, you're going to see 40, 50 million contracts per game will become a new normal. People are still discovering these prediction markets. And as they have expanded into spreads and a couple other, maybe ultimately we'll have player props too available in Robinhood. So, yeah, the number will only go up. Maybe we'll see peaking around 50 million. I don't know exactly what the addressable market size is, but you get to a point when you do math around it that it's yeah, they're probably in the 200-300 million dollars in sales per year around this prediction market for now, in my
Yeah,
view.
I'm not sure how many people are like trading in and out like throughout the game. I would assume it's a smaller percentage of the overall, but I do know that that's happening. But a guy that I follow that's tracking all of this on his own spreadsheet, he said he put this out about an hour ago. Juan Rodriguez is the guy's name. 124 million contracts traded yesterday, just on Sunday. 124 million contracts traded. That's 1.24 million in revenue.
Yeah, it's funny. So you can, I don't know if you've done this, Emperor, but in on your phone, if you turn the Robinhood app on while the game is playing, you can you can put up the chart of both teams side by side right on your phone. And just like we watch ticks, the zero DT guys, and then they go in both directions, calls and puts. That's exactly what's going on. People have these odds of win or loss, Dallas odds win or loss. And they're watching this chart move up or down as the game is happening, and they're betting in that direction and they're cashing out. That's how it typically works. But if that's what people were doing yesterday, then I think now in terms of context of stock market, yesterday was a chop day for that game. Where, it was 3 point or one possession game kept going back and forth between the two teams. So if you were trying to look for a trend, there was no trend. Both were at pretty much 50-50 yard for most of the time, and you couldn't make any money on it, essentially.
Look at the nest up top. I just pinned. I actually took a screenshot of it last night and posted it.
Yeah, look at that. That's exactly what I'm talking about. A chop day yesterday for now. If you get something like when the Lions played on Sunday, right? If you look at that chart, I bet you it was a very clean, just steady up all the way towards 100%. But yeah, I wanted to circle back to what Stock Talk was saying. Your question was about Ion Q, right? And how, generally speaking, how does one go about
Yeah,
protecting,
so there's
right?
two. It's kind of a two-part thing here. One being you have a sector that the quantum sector I think is an interesting subject either way. And then within that you had like Citron come out and say that they were shorting quantum today. And so I'm curious within the noise of a catalyst type of event or people flooding into quantum that's had these tailwinds with headlines behind it. The navigation of that from your perspective.
Very simple answer. Callers. For those who understand, they know exactly what I'm talking about. But the answer is very simple: collars. I did collars on 7 positions last week, and not entire positions, but partial positions. And the plan is to continue to do the same thing in many other positions. So I'm going to put this in the nest because I posted about this last week as well on September 19, in fact. This is about IonQ. I've been long this stock for a very, very long time. From low teens. So it's been a phenomenal trade for me. And that's not counting many times when I wrote covered calls in this, or I sold out of money puts that also expired worthless for maximum gains. But anyways, take a look at this post in the nest. After that massive run when the company held the analyst day and it broke out through 45 and it just went straight to 70 plus, it was so easy. And this is what I typically do when my stocks get extremely overbought, which at this time I find there's a lot of those right across the board with, too many overbought conditions everywhere. So the simple thing that I like to do is I go out 2 to 3 months and I sell 30 delta, way out of money, 30 delta calls. And I use the proceeds to partially finance right at the money puts. It's called collar. You're selling the covered calls and you're financing right at the money puts. The net, you still pay net debit for it. So in this case, if you look at what I did in IonQ, it was $11.60 that I paid for the puts at 70 strike, expiring in November. And I partially financed it by selling the max November 105 strike covered calls that was available at the time for 460 credit. So I paid net about $7 for that, which is 10% of the underlying. And now I can go to bed, I can sleep, and I not have to worry about what may happen to IonQ tomorrow. And that's exactly what happened. You've seen the stock rolled over. Right now it's about $63, but I am 100% fully hedged below 70. It can collapse, get cut in half, all the way down to 35, and I wouldn't care because I am basically fully protected below 70, and all it cost me was 10% of the underlying. That's it. Easy, simple. Now I did this in Rocket Lab. I did this in again. I didn't do on against the entire position. In some cases, I did it against partial position. In some cases, against the entire position. But I did this in Rocket Lab. I did this in Tempest AI. In Tempest AI, I did it against half the position because I don't want to. I do think that that thing is going to make another run towards 100 plus soon, maybe after next earnings, and at least 4 other stocks in my portfolio. So that's what I like to do. When things run too hot, and especially when you are holding stuff that is like Stock Talk was saying, these are pre-revenue companies that you have no idea they may not make any money for the next 5 years, and this could end up being a dot-com style bubble or whatnot, right? Just collars, easy peasy. Just do collars. 30 delta, sell the 30 delta covered calls, finance right at the money, put options. That's it.
Those collars, you're basically putting a floor and a ceiling around your position, right? Like, okay, I'm up this X amount. Let me
Yeah,
just squeeze it in here and survive. And and what's best case scenario, right? You just sit in it. I mean, and if there is any drawdown, like you're not that worried about it.
that's exactly right. So if IonQ, for example, goes to 105 on November expiration and it expires and the stock settles above 105 on November expiration, I'm going to make the entire money on top of what I've already made. I'm going to make more money all the way from 70 to 105. That is $35. $35 as a percentage of when I put this collar on, which was when the stock was at 70. 35 divided by 70 is another 50% gain from the time when I put on this collar, right? But on the other hand, if the stock collapses, right, and goes right below 70, max loss is $7 or 10% of the underlying, because for that collar I paid $7. That's it. Now, I'll give you an example because I don't have a position in Centrus Energy, and I know Stock Talk does. But at the time when I was looking at a whole bunch of these stocks last week, and I was thinking about, how some of these stocks have made a dramatic move. Now, I don't, the prices have changed since then, but I was looking at this at Centrus 2 at that one point, and I was seeing that you could have gone to November and you could have sold 400, and this was when stock was at 303 or 304, that's Centrus Energy. You could have sold 420 strike covered calls in November to finance right at the money 300 strike puts. The stock was trading at 302 or 303, something like that. Net cost was only $14, which as a percentage of the underlying is less than 5%. You are 100% protected below 300, and it could collapse. It could go to 150 or 100 for that matter. It doesn't really matter. While you're still leaving, giving yourself room all the way to 420. Now, maybe you think that even you don't want to even do that. That's perfectly fine. Then you can find something else. But that's how I like to do it, especially after parabolic runs. One could do this in Aklo, one could do this in anything. So if some short seller comes out tomorrow and starts hammering Ion Q and takes it all the way down to 50, 45, 40, I really don't care. I am fully hedged below 70 and would not matter to me a bit.
Yeah, that makes perfect sense. I'm curious, Stock Talk, do you have any thoughts around that strategy? I
Yeah,
know, I mean,
callers are a great way to do it. Callers are a great way to do it if you want to pay for it using, a cap on your position. I mean, me and Jag trade a little differently. Jag is a lot more active than I am. We talked about we had the debate about rolling and stuff. So for me, if I ever want to protect a position, I generally protect my positions headed into binary events. Like I'm one of those guys where, again, I don't know when the market correction is going to come, so I try not to prepare my positions for that event. But if my positions are ever going into, like, if I have a big position that's up a lot that's going into earnings, for example, I just grab some naked puts. I'll try to grab naked puts that can cover the quantity of the shares, that can cover like the underlying 1-to-1, and I'll try to buy them relatively close to the money if I can get them. And that's kind of how I'll manage risk in a binary events. But there's a lot of ways to do it. What Jag's saying is a very capital efficient way to do it, and it allows you to set a target for what you want. But like for me, for high conviction positions, I just can't sell covered calls on high conviction positions because my goal is to accumulate shares on high conviction positions, not to like trim in and out of strength. And I know some people who are really good at doing that. That's not really my MO. My MO is more like thematically relevant stock picking, finding really, really high conviction positions, 2 or 3 in each basket, and just riding them like with insane conviction. Sometimes I even think I'm crazy. Like there are moments in parts of bull markets, like there were parts of last year where I held stuff for like 3 or 4 months longer than I thought I was going to, and I'm like, dude, am I crazy? But like on Centrus, for example, pull up that monthly chart. I mean, I bought the stock at 96 in May, right? It's tripled since then, but you would think, okay, you should take some off the table. I get that philosophy, and maybe I'll regret it, but I look at that monthly chart and I see all-time volume coming out of a 25-year base. This 315 area that's put that price pushed in today is actually a huge historic level. I don't know. I'm rocking with it. I think the fact that it's the only commercial uranium enrichment plant in the entire country, and they just got an expansion from the DOE. Like, I think the likelihood that this becomes the uranium enricher of the entire Western Hemisphere for national security purposes is highly likely. And at that valuation, I think people are going to look off the balance sheet like they have. I mean, when I bought it at 96, the funny thing is I bought the stock at 40 in 2021. And if you go back and look at my tweets, and people were like, dude, the PE is so high. That's what they were telling me in 2021 when it was 40. And I was like, yeah, but they're the only uranium enricher in the country. And people didn't get that. They didn't get why that's valuable, right? Like I had a lot of, you could go look at the debates on my tweets from 2021, and people are like debating me. They're like, yeah, dude, like no one's ever going to pay a higher P for that business. It's not a high margin business, right? And I was like, dude, that's not the point. The point is that we have no, zero, none, zip uranium enrichment capacity in the entire nation, and they're the only guys that do it. And they've 20, well, they really have 50 years of experience doing it, But um, to me, it was a pretty simple thesis, and the stock has obviously tripled since then. And I actually think it's going much, much, much higher. So it's still a 6 billion market cap, right? Like you look at ASPI, LTBR, all these other fuel and enrichment speculative stocks. And I know all the nuclear names. My nuclear watch list is like 45 names. I've spent over 1,000 hours researching the industry. I've researched SMRs. I've researched the entire enrichment supply chain. Like I know this like the back of my hand. And in my view, Energy Fuels and Centrus Energy are maybe the most important strategic assets we have for nuclear supply chain in the whole country. And they're both sub 10 billion market caps. Like, what are we talking about? So to me, that's the thesis. The thesis is not the PE ratio or the fact the chart's extended or anything. It's that I think still people are misunderstanding the opportunity in nuclear. They're focused on the SMRs. There's too much valuation stocked into those, in my opinion. I think billions of dollars is going to come out of the SMR valuations. I even think billions of dollars might not even come out of the utility valuations because those are getting a little high in some places too. And a lot of it, I think, is going to go to the strategic assets because this is an administration that has made it very clear that they value strategic assets and are willing to put administration support and money. And keep in mind, this administration that does not want to throw money around in these industries, right? Like they hated the CHIPS Act. They tried to find ways to get these companies to comply with CHIPS Act provisions without getting money. Like they don't want to give money to people. But in the rare earth industry specifically, and in the nuclear industry specifically, they're moving quickly, and I think much more money will be deployed. And there just aren't a lot of people that have the expertise to do what's being done at Piketon and Richmond or what's being done at White Mesa. It doesn't. You can't just build it. I think that's the misperception that people have, is that like, well, you could just build a uranium enrichment plant. No, you can't. That's not how it works at all. And not to mention the years of regulatory approvals you have to go through. Like people forgot, Centrus Energy was spun off from the DoD, right? The Centrus Energy was a part of the government, and they became a private company. You cannot just spawn a uranium, even if you have unlimited money. Like even if Elon Musk wanted to build a uranium enrichment plant today, he can't just do it. And same thing at White Mesa. Like the heavy rare earth that White Mesa appear. Go look at the strength in Energy Fuel stock from August 10th to today. Nothing but bids, right? And it won't even go down. It was down like 1.7% today. Like that's a bad day for that stock. Why won't it go down? Because they purified heavy rare earths, the only place in the country that did it at White Mesa, and they were commercially approved by the biggest battery manufacturer in South Korea. Right? These sort of validations hold value. Like they are a driver of value, right? And the people who get fixated on balance sheets miss that. So yeah, for me, I agree. There's great ways to manage risk. I do it with naked puts. Jag brought up a great way to do it with callers. But there are some positions for me that I'm so high conviction on in terms of their relative valuations that I don't actively or consistently hedge those positions. I only hedge them in moments where the charts are breaking down or where binary events are coming up. I like to hedge when charts are breaking down, is a simpler way to put it. I don't like to just stay hedged at all times. What's up, Jaguar?
There's a breaking news on Rocket Lab after hours. This stock is making a small move, up $1 or about 2.5%, but this could make a bigger move tomorrow. We'll see. They're saying that Rocket Lab and Synspective strike another 10 launch deal, boosting contracted missions to 21 Electron launches. So a little bit more on this. Announced it has secured a second multi-launch contract with Synspective, a leading synthetic aperture radar or SAR satellite data and analytics company from Japan. The new contract for a further 10 dedicated Electron launches brings the total number of upcoming Synspective missions to 21, marking the largest order of dedicated Electron missions with a single customer to date. Following the first launch agreement announced in June 2024, the second multi launch contract within 18 months further solidifies Electron's international expansion. There's more to this. You can pull up the press release yourself and read it. but this just basically further boosts the um, not the funded, but the contracted backlog that the company has. And it just keeps happening around the world. Anybody that wants to set a satellite into the sky, they call the 800 number to Rocket Lab and they do it for them. So this is good news. The stock is settled back in. This is again one of my names that I'm long, and in this case, only against partial position. I've sold all the way out to 70 strike covered calls against partial positions to hedge myself below $45 per share. The concept that we were just talking about. Because the stock ran up so much and so on. But I expect us to pop on this tomorrow. Should be a good day.
Yeah, that stock's been a yeah, that stock has been a beast. All the space and satellite stocks have been beasts. But I mean, to Jaguar's point, Jaguar knows his stuff very well. You guys see his research, and I like to think of myself in the same way. Like we both deep dive the names that we do own and the names that we know, and like we know them. We read the analyst notes, like we know the details. We read the industry surveys. You guys have to know your stuff that well in order to hold it in these kind of markets. Because yeah, this has been a great market. It's been an easy market. Last year was easy market too, but there's moments of volatility, right? Even in easy markets, like last year, there were what do we have? Two or how many 10% corrections do we have last year? 3 or 2? Or Evan, one of you will probably know that. I think it was.
I think it was just one. Did we
We
get
just
two
had
last
one.
year?
Two,
We had
right?
we had one, but there was like 3 that were 5% or above.
Yeah, there was one that was like not 8 or 9, right? I think that was close to 10. But anyway, we had a couple little blips last year. We had a big blip this year, right? What was that decline? 27 peak to
Well,
trough.
we had a big one last year too. That was July and August. Remember
Yeah,
on
Yeah,
yeah.
we had the
July
the
August
one.
was
Sunday
big.
night massacre when Nasdaq was down 1,100 or 1,200 points in one
Yep,
session?
yep.
Yeah, VIX
That's what
went
I'm
to
talking about.
65. Yeah.
What was that peak to trough, Jaguar? Like 12 or 13?
On SPY, it was only like, well, if you don't include like the morning stuff, just day by day, it was only like it was right less than 10% actually.
Yeah, I don't remember, but if you include that overnight when Nasdaq was
The
getting
knife,
hammered, I think it
yeah,
was high teens, something like that.
yeah. I remember
Yeah,
that knife. Yeah, yeah.
yeah.
The overnight knife, yeah. And then that got bought up a lot by the
And
open,
it
and then
was driven by the Japanese chaos, right? With
the
the
yen
yen carry
yen carry
trade.
unwind. Yeah.
Yeah.
Yep. I remember that. Okay, so yeah, so we've had a couple of blips last year. We got a nice big deep blip this year. We got obviously a massacre in 22. So the retail guys have seen the knife. They've seen the knife, right?
Do
So
you know
what?
Stock Talk? Do you know Jeff Mackey?
That rings a bell.
So I know Jeff Mackey. He used to be on CNBC as a one of the panelists for many years on Fast Money. I've had dinners with him a couple times when we were in Vegas together. And he's a very nice guy and very funny guy too. Like he would occasionally throw jokes, in the middle of discussions, and very nice guy. Anyway, so one time, and this was, when I was only a few years into the markets myself, we were out together, and he made a point over dinner that resonated with me. Until today, I remember this. He said that there will be times in the market when the whole stock market, everything, the whole stock market will go down 30% or more. It will happen only a few times in your life, only a few times. When that happens, you go all in. You don't ask questions, you just go all in. You buy the whole market and do not care. You just buy it. It will only happen a few times, 30% or more drawdowns. Now, the reason why it has resonated with me, 30% are very real, like GFC and dot com and so on, or the pandemic crash. But outside of 30%, if you think about just how frequently we get 20 to 30% drawdowns, right? We just had one, in 6 months ago in April, in March and April. Before that, we had one in not that high, but we got pretty close to it in July and August last year. Before that, we had in 2022. Before that, I mean, this seems to be a repeating pattern where these very high drawdowns, very fast and vicious, just happen every 6 months to, I would say, 6 months to every 2 years. Take advantage of those. That's all I was going to say, because you may not be getting full blown bear markets, but you're going to open up the opportunities. They're just going to open up in front of you, and they're phenomenal. They're fantastic. Anyways, I just randomly remembered that discussion one time I had with him.
There's some news after hours since I was just talking about Energy Fuels. Energy Fuels doing a $550 million convertible notes offering. Stock's down about 5.5%. Actually, kind of perfect. Needs to do a 21 EMA retest anyway, so that'd be nice. But very interesting. In this filing, they say exactly what you want to hear. Specific funding targets include our phase 2 rare earth separation circuit expansion at the White Mesa Mill and the development of our Donald Heavy Mineral Sands project in Australia. For people that don't know what that is, who don't follow the Energy Fuel story, the heavy rare earth separation that they did at the beginning of August is the first that's ever been done on U.S. soil. Okay. It was then validated 8 days later by the largest battery manufacturer in South Korea as high enough purity to be used in electric vehicle batteries. That is another very major validation. And now today they're raising 550 million, and it says specific funding includes the expansion of our phase 2 rare earth project at White Mesa Mill and their heavy rare earth mining and purification project in Australia. So this is, I think, the perfect use of the money. And stock is getting sold here. We'll see how it acts tomorrow. I'm not the one to call for day-to-day moves, but we'll see. But stock is down about 6% after hours here. For people that don't remember, Centrus Energy did an offering when the stock was about 260 back in June, or I believe it was July. I forgot exactly the month it was. Stock fell from 260 to 160. Then a week later, 160, by the way, was around like I believe the 100-day or was around the 21 weeks, something like that, moving average. I forgot exactly what it was, but anyway, it came down into that spot to like the dollar, and then a week later, the U.S. Secretary of Commerce Howard Lutnick shows up at a MOU signing for Centrus Energy, and I tweeted about it, and I was like, how often does the United States Secretary of Commerce go to the signing of not a major national contract, but an MOU for a sub $4 billion company? Has that ever happened? I haven't. To personally attend it made no sense to me. But anyway, the stock then trended up the next day about 3 or 4%. It went from 160 to 165. And in the preceding 3 weeks, the stock ran back to 300 plus with no other news. Just the U.S. Secretary of Commerce had attended this MOU, and no one saw it, and no one recognized the significance of the news. Wasn't on any news sources. But I tweeted it with a bunch of question marks. How often do you see this? The stock doubled in the 3 weeks after that. And then last week, they announced an expansion of Piketon and Richmond. Like the signs, the tea leaves were there for those that were paying attention. But the problem is that this is why there's so much more alpha in mid caps, because Wall Street doesn't have their eyes on this. Not one analyst commented on Lutnick attending that ceremony. Not one. And I read all of their reports, all of the ones that cover Centrus at least. Nobody commented on it. Nobody thought that was significant. Really? And you're signing an MOU, a meaningless MOU that you sign every few years. All of a sudden, he's attending your ceremonies. I thought that was significant. And then you see 2 weeks later, they do the thing. And so since they're offering, the stock's like doubled since they're offering 2 months ago. Centrus has. So I don't know. But there's a supply chain the United States lacks severely, and that is rare earths, right? With China, that's our pain point with China, especially heavy rare earths. They push the pressure on us every single time we try to lever something in negotiations. Why do you think the China negotiations didn't go anywhere with Trump? Because he knew he could bully everyone else, but he couldn't bully them because they were like, dude, we'll just shut off the rare earth tap. And your entire aerospace and defense industry, everything is fucked. Your semiconductor industry, you won't be able to do anything. And so he knew, okay, I can't battle with that. And so now the administration is racing, right? You saw the MP deal You saw the Lithium Americas deal, although I don't know why they did the Lithium Americas deal before securing more rare earth deals, but we'll see what happens. But the Lithium Americas deal, the NP deal, there will be more deals. What they're trying to do is essentially not nationalize, because they're not taking 100% stakes in the company, but they're attempting to somewhat nationalize a heavy rare earth supply chain overnight, right? To spawn one overnight. And there's only a handful of assets that are commercially viable in the country. And if you pay attention, you'll know which ones those are. And all of those stocks have doubled in the last month or so. But I think they haven't been more broadly recognized, their importance. So this is a great offering. I think this money is going to be well used. I think they should do a bigger offering. I think they should do another offering. I think with mid caps, when you're doing offerings like this, I think the investor base is more tolerant of it, especially when you know you have an asset like that. So yeah. Anyway, they did an offering. I just wanted to mention that since I was talking about that stock earlier.
Yeah. Two cleanup pieces. So the Nasdaq futures that night we were talking about last was like August 1st, I think, August 5th. I'm sorry. They were down 1,200. Jag was spot on that 1,200 at one point. The peak to trough was 16% on the ES or S&P futures. It was 9.99% peak to trough. So you technical folks can qualify that or not. We've got a few minutes here until the top of the hour. We do have a hard cutoff at the top of the hour. Last thing I just want to ask about, we don't have to dive fully into this, but Schumer just came out and made some comments here. Jeffries did as well. We met with Trump. We have large differences. It is up to Republicans if they want to shut down. We made proposals. It's the typical politics thing. But we did see Kalshi has it at like a 75% probability of government shutdown right now. The last one we saw that actually shut down, obviously, we've heard this story over and over for many years, but the last actual shutdown was December of 2018 for 35 days. Do any of you guys have concerns about this? Is it, well, as soon as it gets resolved, just hammer the buy? Like, I don't know if anybody's getting takes around what may come out of this government, possible, potential government shutdown.
It's a nothing burger. And this happens every year. A lot of noise. Nothing happens at the end. They come back to the table. They figure out a way. Look, neither party can lose can lose to the populace. I mean, if you're gonna force the federal employees out because you couldn't just put a damn signature on a piece of paper and say, okay, we're not gonna shut the government down, and now somebody has lost their job and whatnot. I mean, these kind of things just can wreck your political career essentially. So nobody has ever any incentive, to move forward with the government shutdown. And yeah, and by the way, even when it has happened temporarily, there are mitigating factors that are involved in which the treasury has so much money, right, where they can continue to run operations for a good amount of time, whether it be several weeks or even months at a time while they work out a detail. So it's always a nothing burger, and this would be the same way as always.
Yeah, that's we haven't even seen this. I mean, how many headlines to Jaguar's point here? How many headlines or how many times has it been in the news over the last 6, 7 years since the last time it did happen? And it never happened any of those times. I do remember at one point we went sideways. I think it was like 2023. We went sideways for like a month, waiting on them to figure it out. They figured it out. Market rips. I don't know. Stock Talk. Did you have any thoughts around that government shutdown?
Yeah,
Nothing burger.
Jake's right about that. I mean, if you've been trading for more than like I don't even want to say more than 5 years, even for those of you who started during COVID, how many times have you seen this? Probably every year. No, and come on, look, it doesn't matter who you voted for. Okay, let's get one thing straight. Like nothing changes. Nothing changes. Budgets go up. Military budget goes up every year. The broader budget goes up every year. The money printer stays on. Growth over inflation. Nothing changes from regime to regime. Democrat, like nothing changes. If you've been, I mean, I don't know. Even if you're in your 20s, like you've seen it for long enough. Nothing changes. It's just one big train, one big party, one big system. It's just like, you know, growth over everything, money printing over everything, one regime. They're not going to shut down. If they do shut down the government, it'll be for a blip. It's happened like what, for a couple hours. It's happened a few times in history for a couple of days, or a couple of, like, okay, it'll happen for a blip if it does, and it rarely, if ever, happens. So yeah, it's not something you should worry about. Like, I'll say this again. I think the biggest risk right now to this market, and I think right now, if we're most people in this space care about the market, right? I mean, yeah, you care about the economy too, but that's really hard to talk about on a person-to-person basis because everyone's in different jobs in different parts of the economy in different states. So, you know, hope everyone's doing well personally. But as far as the market goes, like, you know, the market is dependent on a lot of things going right, but it usually goes up anyway. And the hard part about that is, if you're an onlooker, is there's so much fucking noise. There's so much noise, and you just have to find a way to navigate through it. But I mean, it's gonna take a lot of you time to distinguish what's important and what's worth paying attention to. But I still believe the biggest risk in this market, more than the Fed, more than labor, more than anything, is that the next generation of AI products are underwhelming. That, I think, is the biggest risk. And like, I think the race to real world AI that we're seeing, like autonomous vehicles and humanoid robotics, I think that is part of an attempt by the industry to like put AI in front of people so that they're convinced that it's working, you know? Because the ChatGPT moment spurred what? Trillions of dollars in global investment now, trillions of dollars in market capitalization on top of that investment, right? So the multiple expansion, the inflow of investment, the market cap expansion, that is just one thing. Not to mention the actual dollars that have been invested in startups and have been spent on GPUs and so on and so forth. So trillions and trillions of dollars, right, in just a couple of years. And now we're staring down the barrel of a promise that I think will happen, but we don't know when. And so I think the next 10 years for the market are really going to be a battle of investor patience on the ROI of AI and the ability for these companies to rapidly deploy AI products that are useful, not cool. Like, it actually annoyed me today. The headline that came out of, what was it, from Wired, that leaked today was that they've internally released a social media app amongst employees with Sora. And do we have a hard cutoff, Em?
Yes, we do right now.
Oh, okay. All right. But yeah, we'll talk about that tomorrow. But yeah, that annoyed me. I don't think they should be focused on video generation. They should focus on useful products, but we'll see.
There was a headline, a follow-up headline on that just a second ago, actually, as well. We'll hit that topic tomorrow, as well as anything else that pops up, of course. Appreciate everyone tuning in. Thanks to Jaguar Logical hanging out with us here at the end. Make sure you follow all the speakers and our co-host, of course. Stock Talk and Evan should be co-host, normally is. Make sure you follow him. And of course, the host account here. I'm jumping over to Wolf Financial for our stock picks of the week show. And we'll see how that goes, what everyone's doing. Everyone was very mixed last week, kind of all over the board. It was a very tight race, one clear winner. So tune in over there. We'll have that, and we'll be back on this show tomorrow, 3 p.m. Eastern.